Hello guys, welcome back to a brand new video. This video I'm going to be sharing a top-down analysis on euro dollar and my prediction for the next week. Also, I'm going to be going through the price action for this previous week. Let's see the opportunity that we had, the ones that we missed, and the ones that we would have taken. So, first of all, we start on the daily charts. I'm just marking out current price action in front of us right now. I can see a buy side liquidity I'll be taking. We tap into this bearish order block. Then we saw a break of market structure, and we see price returning back, possibly to fill this imbalance or this void, which have apparently been filled already this previous month, sorry. And I expect price to drop down to this sort of area here. We can see imbalances down below. And this is where I expect price to get to the future, which is not anytime soon. So this is our analysis basically from the monthly chart. Maybe this area white. Right. So then we'll drop to the weekly charts. The weekly chart, we can see that price action becomes a lot more clearer. We see that we have this sell-off down. There's an order block right here. These three consecutive occult candles are order blocks. See price currently in discount of the range. Up premium, the green zone is discount. We are currently in discount, so I expect a retracement back, maybe into premium, or just reacts from this fair value gap that will mark out on the monthly and continues down to this liquidity void that I marked out previously. So yes, that's the analysis on the weekly. So let's see the daily chart. Five candles make a weekly chart on the daily, and we can see that on the daily chart, if I zoom out, you saw the annotations I've made. These two lines are the fair value gaps that I marked out on the monthly. This is the break of market structure on the monthly chart, and you can see that it was equal lows, relative equal lows on the daily. So price took out this equal lows, and you can see a bearish correction. You see the lower low, broke short-term highs, failed to break short-term lows, then we broke short-term highs once more. This changed our daily bias to bullish for the time being, but we have tapped into this area, so we're going to see how price reacts. Let's see whether price is going to sell off from here or maybe reach up into this three consecutive candles, which is another block. See price took out liquidity from here before selling off. So price might get to this place, tap into this other block and sell off, or price might go deeper into discount. We don't know what price will do, but let's just watch. So now we're going to go over the previous week. Let's see the price action that we encountered. First of all, 5 candles, 1, 2, 3, 4, 5. This is last week's price action. You see that we paused into this fair value gap. We start seeing correction. We are probably going to this discount zone. Remember to discount once again. We are probably going to this discount zone. If you have to go up to respect this fair value gap right here, it's a fair value gap. Discount. So if price taps this fair value gap, we see how it reacts. If price respects this fair value gap, we might just end up impulsing up, taking out these highs, continuing the bullish trend. Or price might disrespect it, treat it as an inverse fair value gap and continue the trend down. But for now, on the daily we are bearish, on the monthly we are bullish, on the monthly we are bearish, and on the weekly we are bearish as well. So let's just go through this week and let's see. I still expect, that's my bias now for next week. Now I still expect some sort of bullish price action down to this area for the future prices. But let's see how price reacts when price gets there. Now we'll go over this price action. Alright, so let's drop to the 1 hour chart. So what I like to do is I like to mark out each previously, alienate them. So this Friday open. This Thursday's open. Monday, and finally going into Sunday. So the color of this one doesn't actually matter, but let's change the color to the other ones. Make it darker. So I incorporate the power of theory together with daily bias and cues on time and the chart. And from the hourly, you can see that we are bearish, like we saw in the daily chart. I still expect bearish prices to this place, maybe a reaction from. You see this hourly order block. This is a favor lookup on the hourly. I think price already tapped into this favor lookup. Okay, no, not yet, but I expect price to go back into deep premium, take out these highs before selling off. That's for the previous week. So I'm still looking at sales, maybe from Monday, Tuesday, then we have Wednesday of the week, Thursday reversal, and to continue the bearish bullish trend, or we might just blow through this February gap. But when that time comes, we'll deal with it. So on the hourly, what do we see? First of all, we see that we are taking out short-term lows. This low got taken out, this low got taken out, and we are expecting bullish PDR. Other blocks got respected here. This one went up and cleared that liquidity from here for those who were short up here, those who trade their stop loss. You see, traders when they break the structure down to downside, they'll trade their stop loss to the most recent highs. So this Wednesday price action took out those who were profitable being short from here and gave the impression of a reversal on the hourly chart. So those who bought from here, felt that price is going to continue going up. Price went up, took out better liquidity and impulsed down, taking them out in their stops, stopping them out. So that's what we can see from the hourly chart. So let's go to the 15-minute chart, which is our execution time frame. So let us see the opportunities that were available for us this week, this last week, this previous week. You can see the date is Monday, 6th November 2023. So let's check it out. So this is the midnight open price that I marked out. And note, my time zone is New York UTC +4. Got it right here. This is my New York time zone here. So that's what I'm using. So first of all, what we do to incorporate the power of ICT power of TV setup for bearish days, we have an open, we have an accumulation phase, manipulation phase, sorry. Then we have the distribution phase. Then we have the close. So this is the accumulation phase, which is usually the Asian range. Then we have the manipulation phase, which is the Judas swing. This is where we search for our entries up here. Then we have the distribution phase. This is where we hold our trades. And this is the London close, where we end for the day. We don't attempt to predict this price. We just have to get in here, take our profits within here as a day trader. Like I said before, this is the open, which is midnight New York. We see price rally up in the let me see London session, prior to the London session, which is the Judas swing. We position ourselves and then use the distribution phase where we hold our trades and take profits before the close of the day for a day trade. So this pattern, you can see it right here. Let me mark out the midnight open price, MOP midnight open price. So what do we see? We see price rally up in the midnight open price. This right here is the accumulation phase right here. Then we have the manipulation phase, that's this going up right here. And this is where we find out scatter our entries, putting our Q zones at the back of our mind. So we have two Q zones. We have the London Q zone, which is from 2 o'clock to 5. That's the London Q zone, LDKZN, KZN. And we have the New York Q zone, which is from 7 o'clock 10 New York time. Take note, New York time. So right here, what did we see in the London session? We wait for according to the ICT YouTube 2022 model, we wait for an impulsive break of structure after a buy side liquidity has been taken. Where do we see buy side liquidity? We see last week highs. Sorry. Yes, so we see this buy side liquidity have been taken, then we see some sort of going back and forth, accumulating liquidity up and below. Then finally in the New York session, we see an impulsive break to the downside right here. Market structure shift. Then you start searching for our Ph.D arrays that we use to enter price, our entry technique. You can use a fair value gap. There's a fair value gap located right here. There is a bullish order block, OTE. Let me show you. This Fibonacci. OTE is optimal to trade entry. It's basically entry on the 1.8 or 70.5 level of this Fibonacci. You see price respected it, the bodies of the price, the body of the candles did not break above the Fibonacci. So you can enter right here, stop loss above these highs. That's one entry technique you would have used. You have a fair value gap here. Immediately price taps into this fair value gap. Fair value gap. You would have entered immediately here, stop loss above these highs, drop down. Then you have a bullish order block which coincides with this fair value gap as well. So let me draw out the bullish order block. So right, this is a short position. Stop loss above these highs for 11 pips. Then where is your target? Where is your logical target? Naturally, the lowest hanging fruit is this set of equal lows below here. This is set liquidity in form of equal lows. But below, you also have the fair value gap right here. And below the fair value gap, we have huge liquidity void. So if you can hold to this place, you can take your profit at this equal lows, which will make it a 2.005 arrow trade. You hold it to the top of this fair value gap because anything can happen, price might reverse from there. This is 2.63 arrow, but if you had held this to, let me see the midpoint of this liquidity void, that would have been a 6 arrow trade and the price hit it the next day. So let's go for the short term targets. Let's not go overboard. So this is the trade opportunity. You can see that everything aligned. New York Q zone provided the opportunity. Place your order. Forget about it. You don't think about it. You see better liquidity taking. You see achievable target. Another one. Then place your order. That will be all for Monday. So let's go over to Tuesday. So Tuesday, the same thing, the same technique. Sorry for the background noise. I'm currently in an apartment with a lot of people. So until I get my own apartment, which will be anytime soon, I have to manage. We still have this liquidity voice to fill. On the daily, we are still bearish. What do we see? In the London session, note we didn't take a trade on this on the London session on Monday because there was no impulsive break of structure. We found out on the New York session, so that's when we took our trade for a 2 arrow, 2.04 arrow. Then we see that we are still bearish, of course. Then coming to the London session, once again we'll mark out our midnight open compulsorily. Is the midnight open price. Let's mark out the London session. Just a minute. Oh, I think I missed up the midnight open price. Not okay, so let me move it. 0 GMT. You can look at it on there. Yep. Okay. Yep. So this Tuesday's opening price. That's our midnight open automatically. So yes, ICT talks about the normal protraction of the Judah swing and the delayed protraction. This pattern right here that we talked about before on Monday, sometimes price might not go up above the midnight open price for a complete Judah swing. Instead, it will just continue the overall trend when we are too bearish. I call it heavy days. Price will be heavy, so there will not be much of a Judah swing, especially when there's no buy side liquidity in form of equal highs for price to take out and continue the trend down. So ICT calls it the delayed protraction. If you study the ICT content, it talks about it in I've forgotten the episode, but you go through it. You see it. So when we see that we are coming to a London session, we see that 2 o'clock New York time have already begun. We don't expect price to go back up high above these highs to create this manipulation phase anymore. We instead enter on any 15 minutes or 5 minutes PD array, premium array in this case, since we are bearish, to continue the trend down. Now, what premium array do we see? We see another block, we see a fair value gap, then optimum trade entry. Once again, let me show you. Look at the 70.5 and the 61.8 levels are respected once more. So this is another opportunity for you to go short. Presented the very next day after a 2-arrow win. All weeks are not like this. Take note. This is just one of those blessed weeks. Sometimes you might not get an entry throughout the week. You're not expected to trade every day after all. Every week, time the market gives you opportunities, you take advantage of it. So where do you target? Remember, this liquidity void we expect it to get filled up, but we don't know when. We can target the midpoint as I marked out before. This is the midpoint of the liquidity void. Midpoint right here. Okay, let's take this off. So if you target the midpoint of the liquidity void because you don't know when price is going to reverse, you see that this is a 4-arrow trade. That's 6 arrow in just 2 days. It's not a prof challenge pass. How many percent of prof expected to I cannot remember right now, but you see price still continuing dropping down. Price kept respecting PDR raise. It tapped this other block once more. It's consecutive candles, fair value gap, given that opportunity to enter right here, drop down. Then the New York session, we got a classic New York session reversal. But because we are very 7 to 10 o'clock New York time, because we are very bearish, we didn't go high enough. We see price come down, take out this short-term low right here. Short-term low taking out, that's just liquidity. Break of structure right here. Price came and tapped into this fair value gap. So let's mark it out once more. It's a market structure shift once more. This is a fair value gap price reacted from. This is also an optimum trade entry. Do that by yourself. Go into your chart and you'll see what I'm talking about. An OTE level 71.8 or 60.5. This is 1.8 or 70.5 level. So you could have taken that trade right here, which is low probability because we are bearish on the daily. ICT calls this asking for failure, but the forex traders sometimes will might bend the rules. So if you are taking this trade, maybe targeting 1 to 2, you would have hit it right here, just above this high. You would have gotten your 1 to 2 easy. But I don't think you should target any level above here. Why? You trade with daily buyers, not against the daily buyers. Anything else is asking for failure, like I said before. So this trade hits, take profit from the point of entry to take profit in only 1 hour 30 minutes. So you're just going to be in these charts, taking a quick scalp and running away with your profit. So what do we see coming to this next day, Wednesday? We can see equal highs here. Relative equal highs. Let me take off this minute of price. And take this backwards so you can see. So these are relative equal highs. What is the significance of these relative equal highs? Those who have been short from here, who have traded their stop loss from here to here, who are net profitable on short positions, smart money will want to take out their stop losses before continuing the trend down. They don't want you to partake in the move. for the big boys. We are just sheep in this playground. So what do we see coming into Wednesday? We see price goes down, take out the previous day low, give it the impression that alright, price is just going to return back to maybe the premium of this leg and continue the sell-off. But what do we see? We see a huge buy, price rallied up, taking out these equal highs, and this is an opportunity once more in the New York session. But then again, this is trading against the daily buyers. Taking this trade is not high probability, but it's doable. So we see price. Let me mark out the minute open price for MOP, net open price. So like I said before, delayed protraction. In the New York session, that is 2 o'clock to 5 o'clock, we see price return back. I told you before, this trade we entered based on any PDR we just saw because we don't expect it to do that swing once time has gotten to 2 o'clock. So price return back and we see fair value gap right here. I want you to go and look at this in your chart. The price continues to sell off. But in this case, you can see that price has been selling for days, so price is probably oversold by now. And we don't look to trade every day, so you also avoid this day. Maybe you have gotten your percentage for the week, your percentage for the week. I don't know. But however, in the New York zone, you see a reversal pattern. The classic SMCV, smart money reversal. Then we see a return to a discount array form of another block. We have taken a position here. And where do we aim for? The equal highs. This if you are in tune with it, but this is a trade that I might not take because I don't know. But I cannot guarantee that this is a trade that I will take. However, it was a beautiful trade and it's a 4.95 arrow trade to take out the equal highs before we continue the sales. So once more, smart money has, you see a smart money reversal here, price taking asset liquidity and positive move, breaking structure here. Many people see this as a market structure shift. You see price return back into the discount of this leg from here to here, and you see price post up. Most people will think that okay, market sentiment has changed. We are now bullish. So people will be looking for buys, but what do we see? We see price take out this equal highs once more. The liquidity will be resting, and price tanks down, taking out those who entered here, those who trade their stop loss here, and price continued bearish trend. So what I'm saying right now for the previous week, like I said, that I expect price to continue dropping down because of the daily we are still bearish until proven otherwise. If we have another break of this high, then my buyers for euro dollar will be bullish. This high gets taken out, my buyers will be bullish. But for now, I still expect price to expect maybe this fair value gap or do something funny right here and drop down. We'll see how Monday's trading goes. So let's see Thursday's trading now. So Thursday, what do we see? We mark out the minute open price right here. We see price tanked down. We got to the normal 2 to 5 p.m. London session. You can see you have taken a quick scalp, but you see price react from fair value gap right here. Go into your charts, you see this clearly. It's a fair value gap that price started from, so that could have been your target if you had entered a short from this New York session opportunity. London session opportunity, sorry. So you see price in the London session, price failed to go above the midnight price, although it just touched it a little, broke down impulsively, took out these lows, returned back into this other block, fair value gap, tapped, drops down. So this is another opportunity you would have taken. On the 5-minute chart, this will appear very clear. Another block, sell position right here, price above here. where you target this fair value gap. And this fair value gap is a larger fair value gap on the hourly. You go to the hourly chart, look at it right here. It's a larger fair value gap that was refined on the 15 minutes. So price you entered here, expect that there will be a possible reversal right here. So know how to take your profit instrumentally. Yes, we are bearish on the daily. That does not mean that every day will be a down close day. You have to be open-minded as a trader. So right here, you see that price tapped this. It's a 1 hour fair value gap, but we find on the 15 minutes it's just here. And this is a 0.83 hour trade. Let's drop back to the 15 minutes. Right, this is a 3.83 hour trade before price reversed, going up, taking out this buy sellability and tanking in the New York session. Although New York session ended 10 o'clock, so maybe this was a result of news or something. I don't know. There are entries you could have taken here. There's a smart money reversal pattern here on the smaller time frames. I think with a breaker block, if you are the type to have missed many trades, this trade you could have taken. If I drop down to the 3 minutes, I think you will see it clearly. Let's go right here. So price tap into that 1 hour 15 minutes other block fair value gap. Get a reversal pattern right here. It's a fair value gap right here that could have created off, but we don't drop with this. The margin for errors are a lot here. I think there's a broker block pattern also, but this is not our trading time frame, so let's avoid this time frame. It's for those mini scalpers. If you want to do a video for the scalpers also trade this smaller time frame, just drop a comment in the comment section below. I'll read it and I'll see what I can do about it. So Friday, the last trading day of the week. So the way we see the daily chart, it's each day the same pattern that I told you about right here. That's like I've seen before. This is the annotation I gave on the daily chart. This is the same thing that happens on the weekly chart. Monday can see the accumulation phase, then Tuesday forming the Tuesday high of the week or Wednesday high of the week. Then we have the distribution midweek, and Friday's close might see price retrace back up. So we can see that throughout the week we have been bearish, going down. So Friday this is might, when in this case it happened, might have that retracement back up to close from the weekly close. So you see price is fractal. Everything that happens on the daily, on the hourly chart, everything happens on the daily chart, weekly chart, the monthly chart. We trade the same way. However, this Friday is a very weaky Friday. I don't like trading weaky days, but the way we look at the market, still be quite the perspective here. We mark out the midnight open price right here. What do we see? In the latest London session, that's 2 o'clock. We see price create the Judas link 5. Then we have the impulsive break of structure. Impulsive break to the upside, taking out this high and this high. Market structure shift. Where are we likely to go? We see this liquidity void here right here. So price came back down, tapped into this other block right here, which supported price apparently. Stop loss right here. Take profits. We are just filling this liquidity void. Take note, we know that we are bearish on the daily. We are not ready. We are not taking high arrow trades in the opposite direction. Go with daily buyers, and you can see this gave a nice. See, this is not enough for government work, but this is 1.5 now arrow if you get to take this trade, and you can see that price filled this liquidity void to the peak. Look at that beautiful delivery. Look at that precision. From here, price tapped it and rejected. So that was the business for Friday. That's why most people don't like trading Friday. Fridays are mostly days. Only on a few occasions you get good trading opportunities on Fridays. Sometimes you might have a losing week. Friday will give you your winner and make you close positive for the week. Sometimes Fridays take your profits that you made throughout the week. So you're able to be disciplined while trading, to know when and when not to trade. So overall, what are the opportunities we had this week? Had one trade on Monday, which was the 2 hour trade. Tuesday London session we had 4-hour trade, then a reversal on that same Tuesday. In the New York session we had a 2-hour trade. Wednesday trading we had 4.95-hour trades in the opposite direction with daily bias. Then Thursday trading the quick scalp for 3.82 in the London session before price reversed. Then Friday's trading was a 1.59-hour trade. So these are the opportunities for the week. This is everything that happened in the week. I expect price, like I said before, to do something right here. Not, it might disrespect this zone, it might just take out this high, it might take out this high. Price, we don't try to predict what price does. Yes, we anticipate, but we wait for the market to show its hand. The market maker should show us their hand before we engage the markets. Wait patiently for our setups to form and we execute mechanically. So that's all for the week. Thank you very much for watching this video. If you stay to the end, I hope you got something out of this video. If you want this kind of videos, please leave a comment in the description, in the comment section, sorry. Leave a like, thumbs up, try and share this video so other people can see it and help the channel to grow. Okay, so thank you very much for watching until the end of this video. Have a nice day, a nice month, a nice week, and by God's grace we all achieve our goals. So goodbye. Stars out.